How does an issue of Bloomberg Businessweek come together?
Come with us on a journey that brings the magazine to life.
We'll cover breaking news in business and finance.
All of our indicators are saying this is capitulation right now.
We're going to have to be very nimble in terms of our monitoring of the economy and our policy responses.
We'll examine technology and transformation.
Time and attention, that's going to be the coin of the realm in the future.
Dig deep into companies and industries.
Our best guess on business travel really kind of hitting the point where it starts to recover is probably in September.
Discuss power and policy.
Differences among winners and losers of this pandemic are very clear.
Not to mention glamorous pursuits.
These are products that meet you where you need to be met.
It was a one-of-a-kind virtual event, exploring real stories in real time.
This is the Bloomberg Businessweek. Hi and welcome. I'm Carol Massar.
And I'm Tim Stenovec. We're here at Bloomberg's global headquarters in New York, looking back at a really exciting 5 days.
A first-time event that gave a peek behind the pages of Bloomberg Businessweek magazine to the editors and reporters of Businessweek and what they experience every single week. The Bloomberg Businessweek provided a window for readers of the magazine to see how it all gets made. From cover to cover, one important story at a time.
Well, there's a meticulous plan, and then, of course, every week brings breaking news.
That's right. And on Wednesday morning, the cryptocurrency market nosedived, rallying back later that day. The swing, though, sent shockwaves through the investment world. And we had the perfect lineup of conversations to address the moment, starting with Kathy Wood of ARK Investment Management, who is standing by her Bitcoin forecast of $500,000. I asked her what she made of the most recent roller coaster ride.
I think what's happening right now is because the stock market, the highly volatile part of the stock market, the innovation-oriented part of the stock market has gone through such a correction, which has been flamed by inflation fears. I think the correlations among volatile assets are going to one right now, and that's including Bitcoin.
So here we are at 35,000, Kathy. Do you think we go much lower from here?
You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average, which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now.
There's a fair amount of misinformation going on in these markets. So, you know, from Elon Musk tweeting to misinterpretations of what China actually said yesterday, those things get filtered in a very weird way. And even more important in this country, we haven't yet built a two-sided crypto market yet, the way that we have in every other traditional asset class. In the United States,
what do you mean by two-sided?
So what I mean is you can basically only be long crypto in this country. You can buy Bitcoin or you can sell Bitcoin. What you can't do is engage in Bitcoin futures, derivatives, swaps. These are things that bring price discovery and stability over time. And we need to get regulators comfortable that those kinds of things are positive, not a negative in this asset class, which I think we'll get to eventually.
Does the Fed care if Bitcoin or Ethereum or any of the other cryptocurrencies are plunging in value?
Well, you know, I think that, you know, the crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us. So at this point, it's you know, personal curiosity. I watch these markets and try to understand them, watch it on Bloomberg, for example. But it's not something that I really incorporate very much into how I think about where our policy should be.
We haven't had a pandemic like this ever, at least in terms of since we've had data. And in recent weeks, we've had a big downside miss on jobs, a big upside miss on inflation. And I'm wondering, as you try to figure out how the economy is going to evolve, how much trust you can have in your forecasts and your staff forecasts.
We're going to have to be very nimble in terms of our monitoring of the economy and our policy responses. You know, when I think about where we are right now from an economic perspective, the word that comes to my mind is transitional. Like, we've gone through this pandemic, we've seen the loss of millions of jobs, and now we're transitioning out of a pandemic space into more of a recovery space. As we've gotten that public health challenge under control with vaccines and better management of social distancing and other measures, now we can turn ahead. And so we're actually transitioning out of the depths of a pandemic into a recovery period. And it's just a lot of moving parts that we'll have to keep tabs of. What I will say, though, is that I'm expecting a lot of volatility over the next several months. They're going to see fits and starts. You mentioned that in the last several months, we've had data points that have not met up with expectations. I think that's to be expected. And what that will mean is that we're going to have to do extra work. And at our bank, we do lots of surveys of business leaders and communities. And we also do a lot of outreach to have one-on-one conversations with folks on the front lines to get a better sense of what they're seeing, and more importantly, perhaps, how they're thinking about what their strategies are going to be moving forward.
Everybody weighed in on the crypto whipsaw, and our viewers got insight that really put the market volatility in perspective.
We got more of that long-term view earlier in the week from Marcelo Clare, the CEO of WeWork and chief executive of SoftBank Group International. He told Bloomberg's Ed Hammond that WeWork is poised to turn a profit and that the company is totally comfortable doing business in Bitcoin.
The reason why we decided to accept cryptocurrencies was because our customers were asking for it. One of the things that we do with Sandeep is we listen to our customers a lot, and we have to, right? They tell us the type of office they're looking, they tell us the type of setups that they want, and the crypto word came out a lot where employees say, we would like to pay you in crypto. We have accumulated a significant amount of wealth in crypto that we would like to use it to pay for rent, as rent becomes an important part of many companies. So we decided to basically accept crypto, and at the same time, as people pay us in crypto, to us, it's just another currency. It's like we're holding to, we have US dollars, we got euros, we got pounds, we got crypto, we got Japanese yens, we got, so to us, it makes no difference. And when our customers ask for reimbursement in crypto, we pay in crypto. And we have, we've had some of our customers who are paying us in cryptocurrencies. And we have some landlords who said, look, I would like you to pay me in cryptocurrencies. So, the way WeWork looks at it is, we're going to listen to what our customers want from us. And if they demanded that they wanted to pay in crypto, that's why we took crypto as a form of payment.
Now, any of these people we just heard from would be influential enough to make the cover of Bloomberg Businessweek.
That is so true, but this week's issue has a larger theme. It's the how-to issue. And as part of our live event, Bloomberg Businessweek editor Joel Weber gave the virtual audience input in choosing between two possible cover designs. On the left, the cover proposed by Joel and his editorial staff. On the right, the design team's proposal. On Monday, Joel revealed which cover got more support.
After pulling together the results,
Dun-da-da-da.
the winner is...
Drum roll.
Not me. Not the edit team. I feel like it's already like an iconic cover. So, and we talked about it with all of you, and you got to help select this one, and that's the best part. We've never done that before.
Can I ask you, are you ever decided on the cover this early in the week?
This is a little on the early side for us, and I get to sleep well tonight. Like, if I don't know what my cover is going into Tuesday, it's always like a little restless sleep. So
yeah, I know.
Sleep like a baby tonight.
And sometimes there's some last minute changes. Not this week though.
No, we're good.
Up next, more from the Bloomberg Businessweek, including lessons from Jay Leno on how to shop for a classic car, a thing that he knows something about.
He definitely knows that market, plus how some companies and industries fared in the pandemic. The chairman of Curaleaf says it's been a banner year for cannabis.
Alcohol sales are down substantially, cannabis sales are up, and tax revenues from cannabis sales are higher than they are from alcohol sales.
This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
As an athlete, as an entertainer, you pretty much have any door open to you. People will take a meeting, they'll want a picture, you sign an autograph, they have kids and grandkids. but usually nothing happens after that. Because when you walk in the door as an athlete or an entertainer, you have to understand that what the business person is thinking is they're not going to follow up, is going to be flaky, they don't have a capable team, they run a licensing model, not an ownership model. So you have two strikes walking in. You have to come in and really know your stuff, be well prepared, and have a world-class team to be able to execute in all these doors opening. If not, it's just an autograph show.
And that, of course, was Alex Rodriguez, baseball superstar turned investor, now the chairman and CEO of A-Rod Corporation, speaking with Bloomberg Quick Takes' Jason Kelly. Welcome back to our recap of the Bloomberg Businessweek. I'm Carol Massar.
And I'm Tim Stenovec. This week's Businessweek magazine is the how-to issue. It's practical knowledge from some of the world's savviest people. For instance, auto columnist Hannah Elliott headed to Jay Leno's garage to find out how he put together his renowned collection of classic cars.
You know, a lot of people say it's a terrible investment, classic cars. I heard from Jack Chank O'Leary, you know, Mr. Wonderful, talking about, he collects wine. That seems ridiculous to me, wine. Yeah. But cars, it's kinetic artwork, like the Lamborghini Miura. These are now worth minimum $1 million. This one I essentially got for free. I got it in the early 80s. Dean Martin bought it new.
Okay.
His son cracked the crankcase, the engine seat, you know, just...
It was rough.
It was rough. And back in those days, when you had an Italian car like this, you had to know someone in Italy who spoke Italian. You couldn't just call the factory and order parts.
How did you find out about this car?
A buddy of mine bought it. He was a teacher, and he thought and it just got to be too much. And the wife said, things sit in the yard, give it to Leno. You know, so it was one of those deals. See, it costs just as much to restore and repair a valuable car as it does a worthless car.
Yeah.
So you might as well start with something valuable.
Can we talk about this car?
Yeah, this is a good example.
Okay,
this is a 1962 Maserati.
Gorgeous.
This car I found, there was engine problems and transmission problems, and it was sitting at a repair shop for a long, long time, and they just wanted to get rid of it. I think it was $25,000.
Wow.
This was 15 years ago. And we took it, brought it back here. We just needed to do the engine and the transmission and some other work to it. And now it's fine. And now it's probably a $300,000 car.
Speaking of classic models, it does seem like the long-standing way to deliver media content has been completely upended just about overnight. And that even includes live sports, which really was supposed to be invulnerable to cord cutting.
Perhaps nobody knows this better than Kevin Mayer. He's chairman of the sports streaming service DAZN. He was briefly CEO of TikTok, and as a top executive at Disney, he led the rollout of Disney+. He spoke with Bloomberg's Emily Chang about how streaming is changing the game.
So paint the picture for me, let's say 5 years from now. I mean, obviously things are changing fast. How we watch stuff, whether it's sports or other forms of entertainment, how is it different in 5 years?
Well, I think that we're already seeing that the multiplicity of different types of content that people love. I mean, I was at TikTok for a while, and that user-generated, AI-driven stream of these very short videos is really enticing. People are spending a lot of time on that. I know I am. I think the average, when I left anyway, was something like over 60 minutes a day for each user, and there are over 50 million daily users in the US, daily active users of TikTok. That takes up some time. So I think there's going to be a real mix of how people spend their time. The device diversity will be huge. Again, I think short form snackables will be really a mobile phenomenon. Longer form will continue to be viewed on the best available screen, which is typically the television set. But I do think time and attention, that's going to be the coin of the realm in the future.
The pandemic has forced companies and industries around the globe to figure out how to turn adversity into opportunity. At the Bloomberg Businessweek, corporate leaders shared lessons they've learned. First up, United CEO Scott Kirby, who told Brooke Sutherland when he expects the battered travel sector to recover.
Well, we're certainly seeing progress, and we can see the light at the end of the tunnel. But it's a little ways to go before we're all the way through the tunnel. At United, you can think of our business as divided into they're not exactly equal, but close to one-third, one-third, one-third. A third domestic leisure travel, a third domestic business travel, and one-third long-haul international. That domestic leisure travel is more than 100% recovered. That domestic business travel is still down, call it 75 to 80%. Our best guess on business travel really kind of hitting the point where it starts to recover is probably in September. And then for us, the other third is international borders. And as long as international borders are closed, essentially long-haul international travel is going to be shut down. That may take a little longer, but it will ultimately happen, and we will get the borders open. So really good progress on recovery, really good indications of human nature with people wanting to get back and reconnect as soon as they can. So really encouraging, but we're not quite out of the tunnel yet because business demand and international is still closed.
What's driving your optimism? And are you hearing things from your clients that makes you say, this is going to come back stronger than people expect?
Human nature is what drives business travel. Business travel is about relationships. It's not about transactions. So we were unique. We were the only kind of big airline in the Western world, at least, that did not permanently ground big chunks of our aircraft fleet, all on an expectation that business travel would come back. And today I feel even more confident about that.
Traditional cannabis market in the U.S., the traditional user is about $100 billion. But that's not even talking about all the new users that are coming in. So, for instance, the pandemic was an enormous boost to the cannabis industry because a lot of people, particularly elderly, started to use cannabis for sleep, for anxiety. We're seeing a lot of women coming in using cannabis products, drinks products to substitute alcohol from a calorie perspective. And as many people know, cannabis seems to be healthier then. It's interesting, tax revenues in Illinois, in Colorado, and other states that have recently gone adult use, alcohol sales are down substantially, cannabis sales are up, and tax revenues from cannabis sales are higher than they are from alcohol sales. And this is a tendency, and that's why you've seen the big alcohol companies embrace cannabis and start to lobby for the legalization of cannabis because they're seeing it as a disruptive threat to the alcohol business in the United States.
Another industry trying to find its way back, self-care, which became critically important in the year of COVID-19. But in a time when most social activity was put on hold, beauty brands faced challenges. During the Pursuits portion of the Bloomberg Businessweek, Bloomberg's Emily Chang talked with Glossier founder and CEO Emily Weiss.
Makeup was, down something like 30% as a category, last year, just in this giant $500 billion global market. And the reason Glossier's makeup grew, and the reason we actually grew across all of our categories, and we play in almost all of them, is because we've always taken this very people-first approach to, a fresh face, loving the skin that you're in, whether that's through our skincare products or our makeup products. These are products that meet you where you need to be met. We don't take these, this expert, precious approach to beauty. And that has been really, really appealing for, since 2014, since we started. And it was really never more appealing to people in a year like 2020.
Up next, the Bloomberg Businessweek turns its focus to policy and power.
Well, what lessons have policymakers learned from the pandemic? You'll want to listen in.
Some people say, well, I don't trust the vaccine because I think it was done too quickly. Well, it wasn't. It really was a reflection of extraordinary investment.
This is Bloomberg.
Welcome back to our look back at this week's live virtual event, the Bloomberg Businessweek. I'm Tim Stenovec.
And I'm Carol Massar. So over the course of this week, we experienced how an issue of the magazine comes together, specifically the how-to issue. When we come to the themes of power and policy, we're basically examining how to get through a crisis.
That's the challenge facing leaders of the world. And Dr. Anthony Fauci has been on the front lines of the crisis since it reached the U.S. more than a year ago. He spoke with Bloomberg's David Weston.
We don't want to declare victory prematurely, but if we can get the 70% of adults vaccinated with at least one dose by the 4th of July, the way the president has set the goal, I think the chances of there being a surge or a rebound is extremely low. Some people say, well, I don't trust the vaccine because I think it was done too quickly. Well, it wasn't. It really was a reflection of extraordinary investment. And I think when you get trusted messengers out there trying to convince people of why their reasons for not wanting to get vaccinated may not be valid.
Are you surprised we got a vaccine this effective this fast? Because a lot of experts were.
Well, I wouldn't say I was totally surprised. I had said that given the new technologies that I would hope that we would have a vaccine within 12 to 18 months. And you go back on the record, you look, I said that 50 times. And the fact is, from January to December was 11 months. So it was even better than I would have predicted. But no, I'm actually quite pleasantly surprised, not only how quickly it was done, David, but how absolutely effective it is. It's unfortunate we're living through a terrible pandemic, but we are very fortunate to have such a highly effective vaccine.
The COVID crisis has tested the political leadership of the European Union, which was already dealing with the strain of Brexit. Bloomberg's Francine Lacroix spoke with EU Commissioner Paolo Gentiloni about Europe's pandemic recovery.
The impact of this crisis was not an equal one, and differences among winners and losers of this pandemic are very clear in our countries. Second, we have differences among sectors. I was mentioning sectors that are running, like manufacture or constructions, for example, and others like travel, tourism, entertainment industries that are still, despite the easing of restriction, lagging behind. And then we have differences among member states in the Union, because some member states had a less sharp recession in 2020. But I have to say that this Next Generation EU was exactly designed to reduce the risk of divergence among member states. As you know, it is not equally, this common debt is not equally distributed among member states. It is specifically targeted towards countries more affected by the pandemic and with higher economic difficulties.
As we wrap up the Bloomberg Businessweek how-to issue and companion live event, how about one more how-to video? Entrepreneur Sunil Gupta demonstrates how to pitch a VC. Bloomberg Businessweek is available on newsstands now, online and on the Bloomberg terminal. Tim, this was a fun and informative and wide-reaching event, covered so much ground, just like the magazine does every week. Yeah, it was so cool to see the magazine come to life. Quite an experience, and it gives you an idea of what the Businessweek team does to make it all happen.
It's fun to be part of it all and to highlight it this past week on our daily radio show, which you can find every day on Bloomberg Radio starting at 2 p.m. Wall Street time. Also, you can watch us on YouTube by searching Bloomberg Global News.
And catch up on whatever you might have missed by checking out our podcast at Bloomberg.com. You'll also find all of the content from the Bloomberg Businessweek at BloombergLive.com and on the Bloomberg terminal.
Thanks so much for watching, everyone. I'm Carol Massar.
And I'm Tim Stenovec. And this is Bloomberg.